welcome back to the channel. So in this episode, I will cover Nvidia earnings. This is coming from the 10Q reporting. So you look at Nvidia's revenue, right? Revenue is $57 billion in single quarters. That was up 62%. If you look at the record data center revenue, right? Data center revenue is $51.2 billion, up 25% from Q2 and up 66% from a year ago. So really impressive numbers here, right? Revenue up so much, right? 62%. Actually, I thought that the revenue might actually slow down because last quarter we saw that it's already slowed down slightly, right? Then suddenly this quarter picked up again. You can look at the chart here, right? This is showing the percentage growth year over year. So you look at last quarter, that was already like slowly coming down. Then now suddenly from 56% picked up to 62%. So to me, when I look at these kind of things, right, it shows that the company suddenly re-accelerate. Definitely a good picture, right? But somehow, people are having concern for all those crazy things. To me, that's quite crazy. So that's why I say revenue re-accelerate again, definitely a good thing. Look at operating income. Operating income is at 36 billion, also up about 65%, right? Again, this is a huge increase compared to just 1 year ago, right? So 36 billion of operating income, very decent number. If you look at the diluted net income, that is 31.8 billion, also up about 65%, right? Great number. Very, very impressive. So if we look at the free cash flow, now free cash flow is at 22.1 billion. It was up 35%. So free cash flow is not as high as, let's say, like operating income or net income. And I think we covered before, right? Let's say the inventory build out, all this receivable build out, all this actually hit their cash flow from operations. And then to calculate the free cash flow, from the cash flow from operation, you still need to deduct the capex, right? So that is even lower. So, but all in all, I would say that free cash flow, if you just zoom up and look at the trend, right, it is still trending up 22 billion. I think that is still a good number. I believe that next quarter, as they collect the revenues, this free cash flow number will be a lot higher. And that's my expectation. The next one, let's look at gross profit margin, because the latest quarter gross profit margin was 73.4%. Net income margin was about 56%. You look at the margin numbers, right, it's just like trending up, and then they are able to maintain a discount level, right? As mentioned, their guidance is close to 75% of gross margin for the next quarter. So it's projected to slightly increase from here. So that is another good picture to see, right? So 73.5%. So is it a big concern here? To me, no, right? Because all these numbers, as long as they are able to maintain, let's call it like between 72 to 76%, right? Between this range, right? To me, that is a signal that they are having a pricing power. They don't need to lower the margin to entice their customer to buy. So that's why, to me, these are all good number here. Let's look at the PE. This is a forward PE, and this forward PE is based on the share price of $178.88. A good number here, by the way, 888, right? But let's say by the time you are watching this video, the numbers is different already. You just need to do your own adjustment here. But if you just look at forward PE about 26 times, right? To me, that is rather quite attractive, right? Provided that the growth is able to sustain long, right? This 26 forward PE to me is quite reasonable, quite attractive, not just reasonable, attractive here. So I think that's the key numbers from Nvidia earnings, right? Basically the revenue, the net income, the free cash flow, all these numbers all looks good. But people, you look at 26 times, why this is 26 times given that their growth is still at about 65%, right? Why this earnings multiple is not a lot higher, right? I think I will attribute that to some fear, right? The fear is that people looking at the current growth rate, they don't think they are able to sustain this kind of growth. It might slow down in the future, right? And then people are having fear that does all these customers, hyperscaler, are they able to continue to keep buying, right? Or is it like they stockpile enough already, they will stop buying, right? So there's all this uncertainty, all this concern. And I think these questions, this is, by the way, one of the questions from the Slido, right? This exactly is the question that show people are concerned. What are your counter arguments for those who think that AI is a bubble and that stock prices has run up so much, right? I think this is definitely why people are concerned, right? Share price didn't shoot up, but if you look at all these earnings numbers, it's already going up, right? That's why the PE multiples start to contract, right? To me, that is just perfectly normal, and actually it gives us a good opportunity to increase our allocations, right? Let me answer this question here, right? The first thing that I wanted to point out, right, is that yes, if you look at the model, all this LLM model, right? Let's call it ChatGPT, from GPT-4 to GPT-5. Some people, they argue that the advancement is actually incremental and not 10x kind of improvement, right? Which I would agree on that. It seems that, okay, in terms of the usage, yes, hallucination is lesser, but it is not like groundbreaking 10x kind of improvement, right? But bear in mind that now, let's say your product, right? Let's say instead of from 95% correct, become 99%, right? Sometimes you look at 95% error-free to 99% error-free, it's like, a little bit increase only, there's still 1%, there's still error there. So the increment is not a lot. But actually, if you flip that, right, actually the error rate, we are talking about 5% now become to 1%. That is actually 5x improvement, right? But depending on how you frame it, sometimes you look at the improvement is like plateauing, right? But that plateauing, sometimes moving from 95% to 99%, then moving to 99.9% looks like incremental returns. But actually, when it comes to adoption, right, it might translate to a much bigger or higher adoption, right? So that's why I think sometimes our feel, right, is like, okay, you have a feel that all this improvement is incremental, but actually you need to look at the adoption. Because for me, right, I do feel that the adoptions, although a bit slow, right, but they are all coming. So at least that's my sense. Then the question is that because this adoption is a key thing, because as you have more adoption, and adoptions means that there will be more value being created, right? And all these value creations means that there's ways for them to monetize. And this monetization is very important because ultimately you need the end user to benefit, and then they are willing to pay whether directly or indirectly, right? Then that translates to more revenue for this entire AI ecosystem and this entire chain, right? So I think this is something to pay attention to, whether there's all this adoption or not. Tiny improvement, but large jump in the adoptions. Basically, that's the takeaway from this chart here. Then I think the second thing, right, is that talking about adoption, you need to just look at a couple of different industry where all this AI is really adopted, right? So I'll give one example, right? Software development, coding copilot. For those in the software development, they will know, right? Nowadays, you don't do all this coding hand type yourself already. You actually make use of a lot of all this coding copilot, right? Because it is really useful because you don't need to type. Even let's say companies like Microsoft, Amazon, they all mention like their software engineer, how many percent of their codes is actually generated by LLM, right? Initially, we heard numbers is like what, 10%, 15%. Now all these numbers is getting a lot bigger, right? I don't recall the latest number. It could be 30, 50%, right? Or even 70%, right? So I think the most important thing is this, right? All this LLM is being used by software engineers, and the most important thing is that they are able to increase their productivity. I think that is most important, right? Because all these software engineer, their salary is not low, right? They are expensive. Let's say their salary, let's say 100K, right? If you do things that is able to cut their salary, meaning instead of paying them 100K to become 80K, right? Then you have 20% saving. To me, that is like small saving. But if you are able to make the same engineer to be 100% more productive, meaning times 2, right? Suddenly you are generating 100K of excess surplus, right? So that's why I do feel that all these things is real and productivity is real, right? Just talk to those in the software development industry, right? Just ask them whether they are using all this copilot or not, and whether they translate to productivity or not. I think the answer is clearly yes, right? So that's one. Second thing is the customer service and support, so, AI agent and chatbot. I think this one, maybe let's say when you call and then you talk to a person, you thought that it's a person, suddenly it's a LLM, it's a bot, right? We are not there yet, at least based on what I know, we are not there yet. But let's say if you use, for example, like interactive brokers, you go to their site, on their site you can type some questions. I think that one is already there. So I think those text-based chatbot, right, is already moved into all this AI chatbot. But talking to chatbot, I think still in the progress. I think we don't have to wait that long for that day to come, right? So definitely this is still coming. But I do feel that all this AI, right, can be used in all this service, customer service and support, right? It's today, it's not in the future. So these are also one area where AI really shines, because these are, hundreds of or thousands of people in a call center serving customers, right? And they all collect all these informations, right? And all this information collected will be used to train the AI. And instead of relying on humans, why not you just deploy to AI and let the AI do the customer service for you, right? So that's why I think all these things is coming, and it will be one of the area where AI will be deployed. Then the third one is marketing, content and design, generative AI for creativity. Even this screen sharing, right? This graphic is generated by AI. So you can, I don't know whether you can tell or not. It's really generated by AI. To me, it's quite good, right? So in the future, whether it is like a movie poster, or let's say like a flyer, or whether it is some promotional materials that you are looking at, right? I would say that most likely you are looking at something that is generated using AI, because it doesn't make sense to pay money to people doing manually when AI can do it in a way that is faster, cheaper, right? So that's why I think all this, just talk to your friends if your friends is in the all this advertising, content creation kind of area, right? Just ask them whether they are using AI. To me, the answer is clearly yes, because it is cheaper. It's easier for you to do, let's say like try 50 different things and then talk to your customer, see whether your customer like which one, and then from that you can triangulate to see, okay, you can help your customer visualize what he or she wanted, right? And then from there, you can keep on bootstrapping, right? So to me, this is where AI is very useful, right? So I think they are already being used, not to say this is the future, right? This is now. So if you are not using AI, to me, it's like, wow, what happened, man? So this is also another one. Then the other one is industrial and operations, right? All this forecasting, optimization, and maintenance. To me, this one maybe is like coming, maybe not many companies is using. Basically, you need to look at your data, and then you need to feed all this data into AI, into all this data lake, and then from there, let the AI process all this data, right? So to me, these are the things that is upcoming, but I believe most companies, they haven't used this in the industrial and operations setup now. But I think some companies, they use others like Palantir, right? I think all the ontology is also similar things like this, right? They have a way to arrange the data, and then from the data turn into insight, and then from insight turn into actions, right? So you need all these things, and all this loop become very like faster and faster. That's how AI is able to create value, right? And I think this is definitely either upcoming soon or now or not. It will be near future. So it is all coming, right? So the next one will be life sciences and R&D, AI as a force multiplier. So this one talk about like drug discovery. Even recently, Eli Lilly also, they bought some Nvidia AI chip, AI systems, right, to help them with their drug discovery, right? So all these things, I think they are all coming and now, right? So that's why I do feel that when you ask me whether AI is a bubble or not, my answer to you is that look at the adoptions, whether AI is being adopted or not. If it is not adopted, right, then all these things is all fake. But to me, if you observant enough, you look at different industry, they are being adopted. So let me just cover a couple of key points here, which I think is useful, right? So to answer this question, whether AI is bubble or not, I do feel that you need to first define what is bubble, because when we talk about bubble, we think of like, let's say .com bubble, right? Where a company's no tech at all, they just rename, just add that .com, and then suddenly become like a tech companies already. Then the valuation just shoot up, right? Then people like just having so much FOMO and not willing to miss out, just buy like crazy, right? Those are the .com bubble period, right? So if you compare to today's period, you look at Nvidia, you look at their revenues, you look at their earnings, all those are real earnings, right? So that's why I don't feel it is a bubble. Then second thing is all about like real adoptions and economic value, right? So then the question to us is like, are they economic value? For me, definitely the answer is yes, right? Because say for example, let's say if you are having a meeting, you ask one of the colleagues to take notes and then summarize in the meeting minutes, right? So all this is like time cost, right? But if you now have a AI, they just listen in, the AI listen, and then they just compile, transcript, and then help you summarize, then just share it to you. And by the way, all these things is already available on Zoom, right? So to me, that is a real economic value, right? So real adoptions. That's why I don't think it's a bubble. Then talking about capital is coming from all these strong sources and building durable assets, right? I think this is real stuff. All this AI server, they are really doing real work, right? It's not fake stuff, right? Then next one is enterprise adoption is still in the early earnings. So I think this one is, to be fair, like I say, all this use case, right? Use case depending on where you look, right? Sometimes you might feel that things are moving very slowly. Some companies, they keep talking about AI, but you ask them, look at their current process, just judge, are you using a lot of AI in your current process? I think right now, right, there's still many companies that are very slow in it. You don't see adoptions, but you don't see adoption now, because out of like 20 companies, there will be one or two companies that is a bit early, and then they will use all this AI to generate real value, and then they are the companies that are going to win, right? Then the other companies who didn't make use of AI, they will be slow already, then they have to catch up. Then it's sooner or later, all these companies, they will have to use, because it is as simple as all this AI help you save costs, help you increase the productivity. Why not using them, right? Sometimes it's about like, oh, we are afraid of all this data leak up to all these AI companies. We need to safeguard our data. It could be stuff like this, right? So they are slow in it, but sooner or later, they will have to adopt now. So it is a bit like, everyone is using fax, and then the first company already on board using, let's say, like email, right? But email, when you are one of the first using email, sometimes it's like, okay, you still need to use email and fax machine together. Then very fast, everyone will use email already, because it is cheaper, right? Cheaper, faster. Why you want to start with fax, right? Right now, the situation is this: whatever process that you have, right? Whether it's manual process, handwritten process, whatever it is, right? And human process, right? All this process will just move to AI process. So it is a matter of when, and AI and agentic, right? But it doesn't go like start in like one snap, right? All this adoption actually take time because someone need to be there to change the workflow to a AI enabled workflow, right? And all these things will take some time. You just need to be observant. Then overall assessment is like more boom than bubble. That's my assessment. And then when it comes to the investment implications, right? I think we all just need to be like, stay optimistic, but need to be disciplined. When I say this is not a bubble, doesn't mean that, all this neo cloud, everything, there's an AI, everything that goes up will go up forever, right? That's not my point. My point is that at least for the companies that I covered, for example, like Nvidia, right? There's no bubble there. It is backed by legit revenue, net income, free cash flow, right? So I think this, the conclusion is that this period, right, resemble the early investment phase of a major productivity enhancing platforms. Is marked by real infrastructure build out, real adoptions, and plausible long-term economics. In hindsight, it may be seen less as an error and more as an formative stage of a transformative technology shift. Basically, that's the conclusion that I want to draw. So if you want to compare against .com, right? During .com, they lay up all these fiber optics, right? And then when it comes to the utilization, it's right, really not even 10% being utilized, right? Because of all this bubble, right? People keep on building the hardware, but the utilization is not there. But I would say that for Nvidia GPU, right? The first thing is that they are being utilized. Second thing, I would argue that they are able to generate real economic value. But in terms of adoption, we are slowly adopting here. So that's why I feel that it's a matter of like adoptions. Let me just quickly cover because we have a couple more questions that is on the Slido part. Hi, I was wondering your view on estate tax and untimely death, meaning die just before market crash 50%, but 40% tax is at the time of death before crash. So I think we covered this before, right? So the estate tax, right? Say for example, if you hold individual US stocks, that is something that you need to be careful because if you have a sudden death, whoever inherited your wealth, right, will need to pay this estate tax, right? This is something that is concerning. So you need to manage that, right? So that's why for me, I will say that I try to keep my individual holdings not to be that big. Let's say over time, I might sell my individual holdings and move to ETF. And then when I move to ETF, I move to UCITS ETF because once you move to UCITS ETF, right, you kind of like shielded from this estate tax already. That's why I do feel that over time, you need to have your money in all these UCITS ETF. So individual stocks holding is just dangerous. But as long as you are able to transfer, or let's say sell all these holdings before you die, right? Let's say you suddenly fall sick and then you just sell your holdings, transfer your money back to your Singapore or Malaysia or your home country's account, right? Then that's fine, right? The one thing that we are concerning with is the kind of the situation of sudden death where there's no time for you to do these steps, right? Say for example, hit by a car accident, right? So definitely these are still some real risks, right? So you need to be careful on that. That's why to me it's like either you buy some term insurance to hedge against that or you just move your holdings into UCITS ETF. I think that is the way to go. So that's my comment on these questions. The next one, what's your take on Japan 10-year government bond yield surging to 1.71% and its effect on US stocks? So I do observe, actually, if you just look at the 10-year, right, it was maybe like 1.7%, right? If you look at the 30-year, it's even higher. I think it's higher than 3%. So I think this is quite concerning from micro perspective because you all know, right, actually Japan investors, because their yield is so low, they actually money flow out from Japan and go and fund all these US, whether it's bond, whether it's US stocks. So they kind of like supply the capital to the world, right? Then suddenly, let's say if the Japan yield become higher, right? So then sometimes they need to unwind and pay all this higher yield. And if that happen abruptly, right, then you will have a correction on US stock market and US bond market as well, right? So all this talking about like macro flow, right? Capital flow, there might be some concern there. But the problem with this is that it's very hard to time it. It's very like, I don't know, like it could happen. I can say that, right? But can I time when it will happen? The answer is no. And let's say even money flow back to Japan, right? Then all this yield can drop and then it might flow out again, right? So when you talk about macro, talking about capital flow from Japan to the world and from, let's say, US to emerging market, all this flow, of course, for those, let's say like the macro hedge funds, they might do a lot of all these investigations and then they might be betting on the direction of the flow, right? To try to profit. Yeah, they are trying to make money from there. But if you ask me, my style, I don't read too much into all these things because to me, it's like it's just too difficult to time the flow. The timing is difficult. You ask me whether it could happen, I can tell you it could happen, or it could happen means that it is possible it happened, right? It's also possible that it doesn't happen. So that's why the part is that it is too difficult to profit from there. That's why I kind of like just ignore this part. If you ask my take, is that I would say better just to to ignore all this macro. Easier to just pick the companies that you like, pick the ETF that you diversify ETF and just stay invested. That is the right way of investing rather than trying to be a hedge fund manager. So that's my comment. The next one, I read your latest Substack. There you refer to WordPress blog. Who is this writer? Do you know him or her? What do you think of it? Seems like a lot of free information. So yeah, I think he's a friend. So it's just like internet friend. He used to be in my Telegram group. Now no longer in the group. I still stay in touch with him. Actually, I don't even know his real name. I just call him Web because that was his name when he was in the group. So yeah, come back to the person, right? Yeah, definitely very, very good investor. He like to write all this long form write up and then just share freely, right? And I learned a lot from his write up, right? So I think definitely there are good people out there do all this write up and just want to share with people. I do appreciate, in terms of like what he's sharing, right? But in terms of do I know him as a person? No, I never met him. Could be a lady also. I'm not too sure, right? So yeah, but sometimes online friend is also friend. Yeah. So I'll put the link to his blog in the video description here. Okay, that's on this comment. Next one, don't argue with YCX as you embarrass yourself. He's smarter than you. YCX, please don't be upset with the arguments and leave the group. Many benefit from you. Yeah, definitely. I do feel that YCX is sharing a lot of good stuff with the group members, right? So that part I really appreciate. But sometimes I do feel that when he engaged with other group members, right? YCX style is just YCX styles. I hope that the other people who is engaging with YCX don't take that personally. That is just his way, right? Just try to benefit as much as possible from his sharing. And in terms of his style of engagement, sometimes could be a lot too direct. Some people cannot take it and they just leave the group. I would say that don't take it personally. That is just about the style, right? But in terms of the content, I would say that the content is very good. So we try to benefit from it. Don't be too distracted by his style of engagement. Okay, sometimes he can be quite harsh one, I know. So then my advice to YCX, in case if he's watching, right, is that you need to tone down your style so that people are still listening to you, because sometimes you are too harsh, right? People stop listening already. So at least that's the style part. Okay, that's my comment on this. Let's move on. Time in the market beats timing the market. Should we take the current dips as good opportunity to buy or add into quality magnificent 7 business such as Nvidia, Meta and Google? To me, yes. Always good opportunity to add. But the timing part is difficult, right? Because say for example, sometimes it's like down already. I say, oh, good opportunity to add. You add already, then it down another 20%, right? Who knows, right? So the timing part is very difficult. But I do believe that all these companies, right, I think their business is really superior. That's why I have a sizable stake into all these companies, right? Except for Meta, maybe. But I have a lot of Nvidia, Google, TSMC. To me, it's all like Apple. To me, it's all great businesses to own. How do you see 2026? Some say bear market, some say crash. Would you make any adjustment to ensure resiliency of your portfolio? Yeah, to me, my style has been quite consistent one. Very hard to predict whether there will be some sort of crash. Some slowdown, maybe yes. Maybe some correction, maybe yes. But what am I doing? I stay invested, right? The stay invested is the part that is like sounds easy, but many people unable to do. They want to do something about their portfolio, and they hurt their portfolio. That's the problem. Okay, next one. What are your exit strategy for stocks where its mode has deteriorated, and for those surging past your estimated intrinsic value in the short form? So I keep it simple, right? Let's say if I feel that the mode is no longer there, right, I'm happy to sell up that position. So that's the thing. But most of the company that I own, when I observe their business, right, the mode is there, because mode, right, often they are quite resilient one. They let's say the mode is that, oh, it's here today, then next year it's not there anymore. Then that's not real mode, right? So yeah, that's the thing. Next one, does gold have more to run? Gold is a commodity, very hard to have a quantitative kind of assessment. You can even call it like it's driven by sentiment instead of fundamentals. There's not much fundamental to talk about it. Similar to Bitcoin, also same, right? So whether you have more to run or not, you are asking me whether momentum will continue to stay or not. Very hard to say, very hard to tell. Wonder if the overall sentiment of chat participants regarding YCX from skepticism to a gradual shift into mild psychophancy is indicative of anything. Sorry, I skipped these questions. It's too deep for me. I skip. Plans for Thanksgiving. Yeah, I will having travel, and then some travel in the month of December. So maybe in terms of video, sometimes need to stockpile a bit, then release it gradually. What must happen for you personally to rethink investing actively and just do passive investing? I think my way way of investment, right, is really quite passive already. First thing, I have all these ETF. Second thing, when I invest in like the big tech, right, actually they are also having a sizable allocation in all these passive ETF, right? So that's why I feel that my way of investing is quite passive. It's just that I have individual stock holding. So that's why some people say that, oh, you have individual stocks, you are not doing passive. To me, it's like, yeah, it's like how you define on passive investment, right? Because I don't actively trade in and out, right? So that part to me is quite passive. Next one, is there any stocks you're looking at apart the usual Nvidia? I don't want to talk about individual stock picks here. Let me pass on this. Okay, thank you so much. Bye bye.